Right, so let's dive right in today. We are going to do a deep dive into the CIBR ETF.
Okay.
The first trust Nasdaq Cybersecurity ETF.
Interesting.
I think of this like as your crash course.
Yeah.
If you are maybe prepping for a meeting where cybersecurity investments are on the agenda, or maybe you're just like a curious person who just really wants to understand this booming sector, right?
Yeah. Yeah.
Cybersecurity,
They're a hot topic.
hugely important. So
absolutely.
We are going to be unpacking kind of like the key details from this ETF's summary prospectus. And it's dated February 1st, 2024.
All right.
So very up to date.
And
just as a reminder, this is not financial advice. This is really kind of a starting point for your own research.
It's like we're giving you the tools to a jumping off point.
Yeah. So first things first, what is CIBR?
Yeah. What is it?
It aims to track the Nasdaq CTA Cybersecurity Index.
Okay.
Which is basically a basket of stocks from companies that are all about cybersecurity.
I see.
Does that make sense?
Yeah, that makes sense. And I think what's interesting here is the CTA, the Consumer Technology Association, they actually have a say in which companies make it into the index. So it tells us something about their view of what cybersecurity really encompasses.
That's a really good point, because it's not just sort of like traditional antivirus software or anything like that, right?
No.
This index includes companies that are developing the tech, they're deploying it, and they're even specializing in data protection.
That's a good point.
It's a pretty broad...
It is. And a globally diverse one, too.
Oh, interesting.
As of December 31st, 2023, the ETF held stocks from 32 companies.
Wow.
Across multiple countries.
That's pretty amazing.
It is. It really highlights the global nature of cybersecurity.
Okay, so we know what CIBR kind of invests in.
Right.
But like any investment, there are fees involved.
Why, of course.
So the prospectus highlights a 0.59% annual operating expense.
And, it's really important to remember that these fees, they can really add up over time.
Oh, yeah.
The prospectus gives an example
of
a $10,000 investment earning a steady 5% return each year.
Right.
After 5 years, those fees would eat up $329 of your gains.
Wow.
So, that's why understanding the fee structure is so crucial when you're evaluating any investment.
Yeah, really important, okay?
Absolutely.
So let's get into how CIBR decides sort of the proportion of each company's stock.
Yeah, how do they decide that?
To hold, and they use a system called free float market capitalization weighting.
Okay, well, in simpler terms, the bigger a company's publicly traded value, the more weight it has in the index.
I see.
But, and here's the catch. There are caps in place.
Okay.
The top 5 companies can't make up more than 30% of the index.
Interesting.
And individual companies are generally capped at 3%.
Okay.
With a few exceptions.
So it's not a free-for-all for the industry giants.
No, not at all.
Which is an interesting, what's the reasoning behind those caps?
It's all about balance and diversification.
Right.
Those caps help prevent over-reliance on just a few huge companies, making the ETF less susceptible to major swings if one of those giants falters.
That makes a lot of sense.
Yeah.
Okay, now another key point. CIBR is passively managed.
Okay.
So it simply aims to track the Nasdaq CTA Cybersecurity Index, not actively trying to beat it.
Right, and that's where understanding your own investment philosophy comes in. Passive management offers advantages like lower fees and simplicity.
Yeah.
But it also means you're essentially riding the wave of the market.
Yeah.
Active management, on the other hand, involves a manager making strategic decisions.
Right.
But that usually comes with higher fees as well.
So there are trade-offs to consider.
Absolutely.
With either approach.
Yes.
Okay, now let's dive into the risk factors outline. In the prospectus, and I have to admit, some of these surprised me.
Oh, I'm curious to hear which one stood out to you.
Well, for one, the cybersecurity company's risk.
Okay.
It's ironic, right? These companies are all about protecting others from risk.
Right.
Yet they face considerable risks themselves.
Absolutely. They operate in a constantly evolving landscape with rapid technological advancements and fierce competition.
Yeah.
That constant need to innovate can create volatility.
So while the growth potential in cybersecurity might be alluring, investors need to be comfortable with that inherent volatility.
Absolutely.
And speaking of volatility, the prospectus also highlights the index concentration risk.
Right. Yes, and this is a key consideration.
Yeah.
With any sector-specific ETF.
Right.
CIBR's performance is ultimately tied to the overall health of the cybersecurity market.
Right.
If the sector experiences a downturn, the ETF will likely follow suit.
It's a good reminder that diversification is essential in any investment portfolio, right?
Yes.
So even within a specific sector, spreading your risk across various companies and strategies is key.
I agree.
And it's not just industry-specific risks either.
Right.
The prospectus also mentions how broader market conditions, like the Fed's moves to fight inflation, can impact the fund's performance.
Right. The current market conditions risk.
Yeah.
It's something to consider.
For sure.
With any investment.
Yeah.
It's a reminder that investing never happens in a vacuum.
It's all interconnected.
Everything's interconnected.
Speaking of interconnections, there's a risk that might not be immediately obvious.
Right.
And it has to do with the index itself.
Ah, you're talking about the index provider risk.
Exactly. What if the index itself has errors?
Yeah.
Or isn't calculated correctly?
Good point.
What kind of impact could that have on CIBR?
It's a great question and one investors often overlook.
Yeah.
The index provider plays a critical role.
Oh,
They select the securities.
Right. Determine the weighting and ensure the calculations are accurate.
Mm-hmm.
Any mistake on their part can have a ripple effect on the ETF's performance.
It really highlights the importance of researching not just the ETF itself, but also the index it tracks.
Absolutely. You want to understand the methodology, the potential biases, and the track record of the index provider.
So we've covered a lot about what CIBR is, how it works, and some of the key risks involved. But there's one more crucial element to consider.
And what would that be?
The management team behind the ETF.
Ah, yes.
After all, they're the ones steering the ship.
Right.
Even with a passively managed fund.
You're right. While they're not picking individual stocks, they're still responsible for ensuring the fund accurately tracks the index.
Exactly.
And managing the day-to-day operations.
So let's take a look at who's calling the shots.
Okay.
At CIBR, the prospectus tells us that the portfolio is managed by an investment committee.
Chaired by Daniel J. Lindquist.
Okay.
Managing Director of First Trust Advisors.
Gotcha.
And he's joined by a team of experienced professionals, including David G. McGarrell, the Chief Investment Officer.
That's a pretty impressive lineup.
It is.
Each member bringing their own expertise to the table.
But remember, CIBR is passively managed.
Right.
So what exactly does that mean for the role of the investment committee?
Yeah, primary focus is ensuring the fund closely mirrors the performance of the Nasdaq CTA Cybersecurity Index.
I see.
Think of them as expert navigators.
Okay.
Keeping the ship on course, but not necessarily choosing the destination.
So it's less about outsmarting the market.
Yes.
And more about accurately reflecting it.
Precisely. Passive management is all about capturing the returns of a specific market segment, in this case, cybersecurity.
Okay, before we wrap up this part of our deep dive, there's one last practical detail I want to touch on.
All right.
How do you actually buy and sell shares of CIBR?
That's where understanding the mechanics of ETF trading comes in.
The prospectus explains that CIBR issues and redeems shares continuously.
Okay.
But there's a catch.
Oh.
It's only done in large blocks called creation units.
Right.
So for individual investors like me, how do we get our hands on CIBR?
That's where the secondary market comes in.
Okay.
CIBR is listed on the Nasdaq Stock Exchange.
Okay.
And you can buy and sell shares just like you would with any other stock through your brokerage account.
So you would place an order to buy or sell at the prevailing market price.
Exactly.
Which can fluctuate throughout the trading day based on supply and demand.
That's right. And that's why staying informed about the factors influencing CIBR's price is crucial.
Absolutely.
That includes the overall performance of the cybersecurity sector, market sentiment, and even news related to the specific companies held within the ETF.
So we've covered a lot of ground.
We have.
In this first part of our deep dive.
A lot of ground.
From understanding the basics of CIBR to examining its holdings.
Yes.
Fees, risks, and even the mechanics of trading.
Hopefully you're already feeling more equipped to navigate the world of cybersecurity ETFs.
And remember, this is just the beginning.
That's right.
There's always more to learn.
Always more to learn.
And explore.
Absolutely.
But before we move on to the next stage of our exploration, let's take a moment to recap.
Sounds good.
What we've learned about CIBR and its unique features.
So let's rewind and revisit those key takeaways from the prospectus that make CIBR stand out in the ETF landscape.
Perfect. And remember, this deep dive is for informational purposes only.
Right.
It's not financial advice.
Right.
And we always encourage you to do your own research.
Absolutely.
And consult with a financial professional before making any investment decisions.
Couldn't agree more. Let's start with what might be the most eye-catching aspect for many investors,
Right.
CIBR's focus on cybersecurity. This isn't just any tech ETF. This is specifically targeting companies at the forefront of this increasingly critical.
Absolutely.
Yeah.
And what's really fascinating is how the index, and therefore the ETF, defines cybersecurity.
Right.
It's not just about building digital walls.
Right.
It's about a whole ecosystem.
It is.
Of companies that are involved in developing, deploying, and even specializing in data protection.
That breadth is reflected in the ETF's holdings.
Right.
We're talking 32 companies.
Wow.
As of December 2023.
Okay.
Spanning multiple countries, it paints a picture of a truly global sector.
It does.
Not limited by geographical border.
Right. It underscores that cyber threats and the companies working to combat them exist worldwide.
Absolutely.
But let's get back to something you mentioned earlier, the role of the Consumer Technology Association, the CTA.
Right.
In all of this, they help decide which companies are included in the Nasdaq CTA Cybersecurity Index.
Yes.
That CIBR tracks. What kind of implications does that have?
It's significant because it suggests that the CTA has a very particular and perhaps evolving perspective on what constitutes cybersecurity.
Yeah.
Their choices give us clues about the trends.
Right.
They see shaping the industry, for example.
Okay.
The inclusion of data protection companies alongside more traditional cybersecurity tech firms indicates a broader view of the sector.
It's like they're looking beyond the immediate threats and considering the long-term landscape of digital security.
Absolutely.
And that makes me think about the cybersecurity companies' risk we discussed earlier.
Sure.
If these companies are operating in such a dynamic, rapidly changing field, does that inherently make them riskier investments?
It's a valid question.
Yeah.
And the prospectus acknowledges that risk, the very nature of innovation, implies a certain level of uncertainty.
Right.
These companies are constantly pushing boundaries, and that can lead to both significant rewards and potential pitfalls.
So while the growth potential in cybersecurity might be alluring,
it is.
Investors need to be comfortable with that inherent volatility.
Absolutely.
And speaking of volatility, the prospectus also highlights the index concentration risk, right?
Yes. And this is a key consideration with any sector-specific ETF.
Right.
CIBR's performance is ultimately tied to the overall health of the cybersecurity market.
Exactly.
If the sector experiences a downturn, the ETF will likely follow suit.
It's a good reminder that diversification is essential.
It is.
In any investment portfolio.
Right.
Even within a specific sector, spreading your risk across various companies and strategies is key.
Absolutely. And now let's shift gears and talk about the index provider risk, something we touched on earlier.
Right.
It's a risk that many investors might not even consider, but it's worth examining more closely.
You're right. It's easy to assume that the index is this static, infallible entity. But in reality, there's a human element involved. And that introduces the possibility of errors or biases.
Exactly. The index provider is responsible for a whole range of critical decisions. Selecting the securities, determining the weighting methodology, and ensuring the accuracy of the calculations. Any mistake in these areas can have a direct impact on the ETF that tracks the index.
And have there been real-world instances where index errors have affected ETFs?
Unfortunately, yes. There have been cases where miscalculations or data glitches have led to discrepancies between the ETF's performance and the intended index. It underscores the importance of due diligence when evaluating not just the ETF itself, but also the index provider and their track record.
So investors should dig a little deeper look at the index provider's history.
Absolutely.
Their methodologies. Any potential conflicts of interest. It's all part of being an informed investor.
Now let's bring this back to the CIBR ETF specifically. We know that it's passively managed, aiming to track the index rather than actively trying to beat it. But what does that mean in practice for the team managing the fund?
We mentioned the investment committee, headed by Daniel J. Lindquist, but what's their day-to-day involvement?
Their primary responsibility is ensuring that CIBR's portfolio closely mirrors
Okay.
The composition of the Nasdaq CTA Cybersecurity Index. They handle the practical aspects of buying and selling securities to match the index's weightings.
Right.
And any changes that occur.
So they're like expert conductors, making sure the ETF's orchestra is playing.
That's a great analogy.
In harmony with the index score.
It's a lot less about making bold predictions or trying to outsmart the market.
Right.
And more about precise execution.
Yeah.
And alignment with the index.
It's a different skill set altogether, requiring meticulous attention to detail.
Is.
And a deep understanding of the index's methodology.
Absolutely.
Yeah.
And it's also crucial for investors to understand the nuances of buying and selling CIBR shares. The prospectus mentions these large creation units that are typically traded by institutional investors.
So how does that affect the average individual investor?
That's where the secondary market comes in.
Okay.
Remember, CIBR is listed on the Nasdaq Stock Exchange.
Right.
And you can buy and sell shares through your brokerage account just like you would with any other stock.
Okay.
And it's worth noting that the price of those shares can fluctuate throughout the trading day, driven by factors like supply and demand, overall market sentiment, and news related to the cybersecurity sector.
So it's not just about understanding the composition of the ETF,
right,
but also being aware of the market dynamics that can influence its price.
Precisely. Now, before we wrap up this part of our deep dive, I want to circle back to one of the key takeaways from the prospectus, the fee structure we mentioned, the 0.59% annual operating expense. But it's important to reiterate that those fees can significantly impact your returns over time.
You're right. Compounding is a powerful force.
It is.
But fees can erode those gains.
They can.
If you're not careful.
Absolutely.
It's a factor investors need to consider, not just with CIBR, but with any investment.
Always weigh the potential returns against the associated costs to make informed decisions.
And speaking of informed decisions, let's move on to the final part of our deep dive.
Sounds good.
Where we'll explore some of the key questions investors should ask themselves when considering CIBR as part of their portfolio.
It's all about connecting the dots between the technical details we've discussed and your individual investment goals and risk tolerance.
Exactly. Understanding the intricacies of an ETF is important. But it's only truly valuable when you can apply that knowledge to your own financial landscape. Okay, so we've really sort of dissected the CIBR ETF,
We have.
Examining its holdings, its fees, the risks involved, and even the team managing the fund. But as we wrap up this deep dive, it's time to bring it back to you.
Absolutely. The listener. All this information is great.
Yeah.
But how does CIBR fit, or maybe not fit, into your investment strategy?
That's the big question.
Let's start with kind of the big picture.
Okay.
Given what we've learned about CIBR's focus on the cybersecurity sector, does this align with your investment interests and goals?
Right. Are you bullish on the future of cybersecurity?
Yeah. Are you?
Do you believe this sector has significant growth potential?
Right.
That's the first question to ask yourself.
And remember, it's not just about believing in the sector's potential. It's also about understanding the risks involved.
Of course.
We discussed the inherent volatility of cybersecurity companies, the index concentration risk, even the often overlooked index provider risks.
Very important.
Right. Are you comfortable with those risks, given your own risk tolerance and investment timeline?
If you're someone who prefers stability and predictability, CIBR might not be the best fit. But on the other hand, if you're seeking exposure to a potentially high-growth sector and willing to accept some level of volatility, CIBR could be an interesting option.
It's all about finding that sweet spot between potential reward and acceptable risk.
Right, and that's where understanding your own investment philosophy comes in.
Exactly.
We talked about CIBR being passively managed.
Yes.
Aiming to track the Nasdaq CTA Cybersecurity Index.
Right.
Does that align with your approach to investing?
If you prefer a more hands-off approach, letting the market do its thing while minimizing fees, passive management can be appealing.
Right.
But if you're someone who likes to actively pick stocks or time the market, CIBR might feel too restrictive.
And let's not forget the fees involved.
Oh, of course not.
While 0.59% might seem small, it can compound over time and eat into your returns.
It can.
Are you comfortable with that expense level, considering the potential returns?
Always compare the fees of different ETFs within the same sector to ensure you're getting the best value for your investment.
And finally, think about how CIBR would fit within your overall portfolio.
Yeah, good point.
Do you already have exposure to the tech sector? Would adding CIBR create too much concentration?
Diversification is key.
Yeah.
You want a balanced portfolio that spreads your risk across different sectors, asset classes, and geographies.
So there you have it, a deep dive into the CIBR ETF.
That's right.
We've covered a lot of ground, from its investment focus and holdings to its fees, risks, and management structure.
Absolutely. A lot of information.
Hopefully you're feeling more informed and equipped to evaluate whether CIBR aligns with your own investment strategy.
I hope so, too.
Remember, this deep dive was just a starting point.
Right. A jumping off point.
Always conduct your own thorough research. Read those prospectuses carefully.
Yes.
And consult with a financial professional before making any investment decisions.
Couldn't agree more.
We've given you the tools and the knowledge. Now it's up to you to apply them to your own financial journey. And on that note, it's time for us to sign off. Until next time, stay curious, stay informed, and keep diving deep.
Bye, everyone.